Hello everyone. Welcome to Educator Guru YouTube channel. I am Vijay Lakshmi, founder member of Educator Guru LLP. I have done my BCom from St. Joseph's College and Masters from Annamalai University. Today, I'll be taking you through the answers of first PUC Karnataka PU Board Model Question Paper. We have already posted the model question paper in our YouTube channel. Today, in this video, I'll be taking you through the section A and B of the question paper with detailed explanation and tips. Now, coming to section A, we have 4 parts. First, multiple choice questions, fill in the blanks, match the following, and one-word answers. Each carries 1 mark. So in total, you can easily grab 20 marks from section A. Now, let us go through the multiple choice questions first. When it comes to multiple choice questions, you'll have to first see the options they have given. Usually there will be 4 options. In that, first you'll have to eliminate the probable wrong answers, which will be easy for you to know the right answer. So first one, accounting records transactions in terms of A, selling units, B, monetary units, C, production units, D, measuring units. The answer is option B, monetary units. Let us see how this answer is right. We know that accounting transactions are expressed in terms of money, which is in turn used to analyze the financial performance of the business. So, the business transactions or events will express their transactions by applying money measurement concept. Hence, the answer for this question is option B, monetary units. Next, how many sides does an account have? Option A, 1, B, 2, C, 3, D, 4. We know that the account is usually shown in a T-shaped form. It has 2 sides. Left side is called debit and right side is called credit. Hence, the answer for this question is option B, 2. Next, passbook is a copy of option A, copy of customer account, option B, bank column of cash book, option C, cash column of cash book, option D, copy of receipts and payments. The answer is option A, copy of customer account. How? Let us see. Usually banks will have many accounts and ledgers. Passbook is a book where the bank records the banking transactions made by the customer with the bank. And the transactions made by the customer is usually recorded in the bank column of his cash book, which is in turn recorded by the bank in the passbook. Hence, the bank column of the cash book must always match and tally with the passbook entries. Therefore, the answer for this question is option A, copy of customer account. Next, if wages paid for installation of new machinery is debited to wages account, it is option A, an error of commission, option B, an error of principal, option C, a compensating error, option D, an error of omission. So the answer is option B, an error of principal. Let me explain you how is that correct. Basically, all the expenses which is paid for purchasing of any asset should be debited to the respective asset account, which is actually an capital expenditure. But in this case, when the machinery has been purchased, the wages paid for installation of that machinery has debited to wages account, which is a principal error. Therefore, the correct answer for this question is option B, an error of principal. Coming to next question. If an opening capital is rupees 50,000 as on April 1, 2022 and additional capital introduced rupees 10,000 on January 1st, 2023. Interest rate on the capital is 10% per annum. The amount of interest on capital shown is in profit and loss account as on March 31, 2023 will be, that you'll have to find out. They have given options like 3,000, 4,000, 5,250, and 6,000. Now let us see the answers and the workings. It is shown that the answer is option C, 5,250. How we got that? First, we need to understand the financial year starts from April and ends on March. So here the opening capital as on April 1st is 50,000. So for that, the interest rate is 10%. So easily we can calculate 50,000 into 10%, which is equal to 5,000. But they have also given that an additional capital has been introduced in the month of January, that is on Jan 1st. So in between the financial year, an additional capital has been added to the business. So from that day till March end, it is only 3 months. So here what we need to understand is the interest for the additional capital can be considered only for, calculated for only 3 months. Hence, the additional capital is 10,000. The interest rate is 10%. For how many months? 3 months. So the calculation will be 10,000 into 10% into 3 divided by 12, which comes to 250 rupees. Hence, the total interest on capital is 5,000 plus 250, which becomes 5,250, which is option C. Hope that is clear to you all. Next, let us go to the next section, fill in the blanks. In this, the options will be given to you. You'll just have to select the right answers and fill. So the first one is asset equals liability plus capital. We all know that it is the fundamental accounting equation, which means always the company total assets will be equal to the sum of owners' investment, that is capital, and the debt the company owes. Next, cash book maintained to record small expenses is called petty cash book. Many of the companies maintain a separate petty cash book to record their small business expenses like postage, newspaper expenses, travel, stationery, etc. And the balance at the end of each day or each month of petty cash book is then transferred to the cash ledger. So the answer is petty cash book. Next question. Normally, the cash book shows a debit balance. Passbook shows credit balance because it reflects the bank's perspective where the bank owes the customer the amount in the account. So, passbook shows credit balance. Assets account balance are debit balance. How? Let me explain. In accounting, when you debit an asset account, it increases the value of the asset and also shows a positive balance in the asset account, which is usually posted in debit side of the ledger. So when you buy or acquire an asset, you have a debit entry which results in positive debit balance. Therefore, asset account always shows debit balance. Next, the expenses paid which are related to the next year are called prepaid. For example, this year you have to pay insurance amount of rupees 5,000, and next year also you'll have to pay 5,000. And you feel like you have more money and you can pay for both the years at once so that you get some discount or something like that. So you plan to pay the next year expenses this year itself. So that transaction is called prepaid, which you have paid in advance. So the expenses relating to next year, which is paid in this year, are called as prepaid. So next, let's go to match the following. First one, asset. Asset is a major long-term resource for a company or an enterprise. So here the option which matches in the B column is the option 6, economic resources of an enterprise. Next, basis of accounting. We have accrual basis, cash basis, but here in B column, the option which matches for basis of accounting is the fourth option, cash basis. Next, contra entries. Contra entries means where cash and bank entries is involved in one transaction. That comes in double column cash book. So the answer for option C is double column cash book. Next, wear and tear of an asset. That is, usually we know that it is depreciation. If an asset is bought, then by using it for over a period of time, it loses its value. So that losing of value, which is called as wear and tear, is known as depreciation in accounting terms. So the answer is option 2, depreciation. Then purchase of fixed asset. Purchase of fixed asset for a company or an enterprise is a capital expenditure, like it is a long-term investment, long-term expense. So it is capital expenditure, which is option 3. Next, let us go to one word questions. First one, expand CGST, Central Goods and Service Tax. It's as simple as that. Next, name any one type of cash book. Here I've given 3 options. In exams, you can choose any one and write it. For your easy reference and remembrance, I've given 3 options like simple cash book, double column cash book, petty cash book. You can choose any one and write. Likewise, state any one types of reserve. I have given same like previous question. I have given 4 options. You can choose any one and write in the exam. General reserves, capital reserves, workmen's compensation fund, investment fluctuation fund. Next, give any example, one example for capital receipt. You can write either amount received by sale of building or legacy received. Next, balance sheet is an account. You have to say whether it is true or false. It is false because balance sheet is not an account. It is a financial statement that you'll have to remember. Next, coming to part B. Here, the part B is for 2 marks. Each question carries 2 marks. You'll have to answer any 3 questions out of 5 questions. Now, let us see the questions one by one. First one is define accounting. I have given 2 definitions. You can choose any one of your convenience and write it in the exam. First one, according to American Institute of Certified Public Accountants, accounting is an art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character and interpreting the results thereof. Or you can also write, according to American Accounting Association, accounting is the process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of information. So you can write any one of these for this question. Next question, state any 2 accounting concepts. Here I've given around 7 to 8 concepts for your easy reference and remembrance. You can choose any 2 and write it in your exams. Let us go through it. Business entity concept, money measurement concept, accrual concept, dual concept, accounting period concept, cost concept, going concern concept, and realization concept. Next, what is bank overdraft? Bank overdraft is a situation where cash withdrawn from the bank is more than the amount of deposit. So now we need to understand why this bank overdraft comes, and is it useful? Is it available for everyone? Usually, businessmen will have the option of bank overdraft from the bank. This overdraft is a flexible thing which a bank has made for the businessman. In any case of emergency, if you are not having enough fund, then at that time bank gives you an extra amount, and also the cheaper interest rate is there. So you'll get the flexibility in both the borrowing and repaying. So this is called bank overdraft. Coming to next question, state any 2 examples of current assets. I've given like 4 to 5 current assets. You can choose any 2 and write it in the exam. Cash in hand, cash at bank, bills receivable, debtors, and stock. So next, they have asked for a journal entry. Give the journal entry for the following adjustment. The question is, transaction is outstanding salary rupees 3,500. First, you have to write the columns. 5 columns will be there: first date, particulars, ledger folio, debit in rupees, credit in rupees. Then salary is an expense and is a nominal account. First, we have to check the golden rules. So nominal account golden rules says debit all expenses and losses. So we have debited salary account. So salary account debit 3,500 to outstanding salary account 3,500. And you should always not forget to write the narration. So here the narration is being salary outstanding. Even the narration carries marks. So students, please don't forget to write the narration in journal entries. Hope this was very useful. And in the next video, I'll be posting the part 2 of the question paper. Any queries or doubts, you can comment below. And please do subscribe to our YouTube channel and like this video, share among your friends. And all the best. Thank you.